David Williams, investor and forecaster for Page Trader. David, welcome to the show.
Thank you. Great to be here.
Yeah, go ahead.
Go ahead, please.
So, David, what I was going to say was I wanted to start off with the equity markets right off the bat, because I know this is one of the things from your forecasting conversations you look at. A really interesting week that came last week, right? Positive thus far. I know you were looking at some levels around 36.52 about 2 weeks ago and what the bounce was. Why don't you share with our viewers what you're seeing and how that started to impact your forecasts going forward here into this last week of the month?
Yeah, sure. Thank you so much for having me on. First and foremost, from a yearly perspective, our forecast is that the S&P is going to decline back to 3730 or lower in 2023. So for us, that means all advances, including the current advance, between now and 2023 should be viewed as a bounce in an ongoing downtrend. So we do expect further advance from where we are now, but we are viewing this as a bounce in a downtrend, and we are quite certain that we'll be back down at 3730 or lower in the year 2023. So I just want to make it clear, even if we see more 3730 now, prior to 2023, any advance that occurs again will be sold off to 2023, into 2023 down at the 3730 level. So from a yearly perspective, we're still bearish, and we're treating this as a larger downtrend.
Now, as you're looking at those for those levels, is this a combination of the changing environment with interest rate hikes, the continued data that's coming through? As you said, you've been holding this belief for a period of time. Has anything, because it seems like a pretty strong conviction that you're giving there. That's why I kind of want to highlight to it. Can you walk through a little bit as to what's has you so quickly, or not so quickly, so strongly making the statement, hey, by 2023, this is where we're going to be?
Yeah, really, most of our work is technical by nature, but I want to make it very clear, and I think you understand, and many people do, that the fundamentals and the technicals do tend to work together, but the technicals can precede the fundamentals by quite some period of time. And in our opinion, the technicals are preceding the 2023 or fundamentals by quite a bit, because it's 2023 is still 6 months off. So what we lean on the fundamentals, and I do want to make it clear, the technicals, and I do want to make it clear that much closer in time, if people would like a little bit more of a breakdown, with the S&P closing monthly above 3820, which we're above that now, we expect that to occur. We believe that the S&P will trade at 4,030 to 4,040 in July. So we're just talking about next month. And of course, July begins in just a couple of days. So we're looking for still further advance, but we are looking for the market to be back down at the 3730 level or lower in 2023. And I have a similar breakdown for you in crude oil as well, if you want to talk about that at some point here.
Yeah, no, absolutely. Yeah, before we pivot there, I think what you made is a great point here, right? There's different forecasts you have. There's a shorter term duration. I think that's where I was looking at some of some of your forecasts recently, about 2 weeks ago, yes, which have been very accurately identifying where there were some cross points and where we would finish. So your shorter term July forecast is looking at that sort of 40-30 level. However, the longer term 2022 to 23 view is that we'll bearish back down to that 37-30 level, which I think is very interesting to see, especially where the market's been all over the place, as we've seen that combination of fundamental issues and pressures coming into play. But as you said, the technicals often lead well before that.
Yeah, absolutely. And we're pretty convinced that we're not going to be seeing our markets in the United States, the indices in general, and I'm really referring more to the Dow Jones and the S&P, but we're not going to be seeing any new all-time highs for a number of years. So this is a much more important decline that we're in now. And again, it will have some very good rallies, but we're not going to be making new highs. And that still means that for traders, for people who watch your program and people who love markets and are very enthusiastic about investing, there will be plenty of great volatility for us to all be looking forward to and trading. So a market that isn't necessarily making new highs doesn't mean that we can't trade it aggressively and enthusiastically and have some really good gains.